Great. Let's try this then. Okay.
Okay.
So, can everybody see my screen?
Yes, thank you.
It should just be my face on a screen. Hang on. So, yeah, okay, let's minimize that. It's too big. Okie dokie. So, yeah, hi everybody. So yeah, I think most of you guys in the group know who I am. I think there was a big clamour from everybody to talk things responsible investing. Seems to be the biggest thing I get asked about, particularly with my fellow vegans. So I thought I'd put together something based on a presentation that we did as a group at Mattoli Woods a few weeks ago. So it was quite good timing, just in time for this. I'm talking about all things responsible investing. So I've put together a few bits of this with the help of our investment guys in the background. So just a quick line from a compliance point of view that I have to say. So I will be mentioning a few individual stocks and shares when I'm going through today, and those aren't intended to be a recommendation or an invitation to buy anything. So that's the legally bit out of the way. So a bit more about me for those of you who don't know who I am. So I have been financial advisor for just shy of 3 years now. So joined Mattoli Woods in 2018 after 13 years in the banking sector. So 16 years in the world of financial services. So been around a little while, but responsible investing has always been a big passion of mine because I've been vegan for the last 4 years. So the background to responsible investing then. So it has become extremely important, not just for vegan and ethical people, but in the whole of the investing industry, really. In terms of interest has really exploded over the past few years. So it is a bit of an alphabet soup, though, full of acronyms and long words, so it can be difficult for people to understand. So the aim of this presentation is to go some way to making the whole area a bit more accessible and easier to understand. So on that note, here are a few of the different jargon terms and acronyms that are used. And what some of them are interrelated, really. So some of them mean the same thing, or sort of very similar in context. So ethical investing all really started off about 40 years ago, in 1984, when Friends Provident launched their stewardship range. That was all about ethical investing, but it was really more about imposing your moral views or moral values on your investment portfolio. And that was done by a process called negative screening. So basically what that means is you look to screen out sectors of the market that you felt were unethical or morally dubious. So you might screen out areas such as armaments, tobacco, betting, alcohol, animal testing, and concentrate on more morally good areas of the marketplace. And that's still very much prevalent in the market now. And SRI, or socially responsible investing, is quite similar to that, really. So it's all about screening out the sectors you feel are morally dubious and focusing on those areas you feel are more morally good or beneficial. Next, we've got the big hot topic and the hot term that's used a lot is ESG. So that ESG integration, ESG, which I'll come on to in a bit more detail in a minute, stands for environmental, social, and governance. So this isn't negative screening. It's about incorporated environmental, social, and governance factors into every investment decision that you make. So really more about risk management than it is about imposing your moral views on the investment portfolio, that one. And then moving down to the bottom line, we've got sustainable and impact investment, positive change. Again, they're all sort of interrelated, meaning similar things. So sustainable investment is about investing in things that make a positive change and contribution to the environment. So something like wind farms, for example, because they reduce CO2, and looking to invest in companies that have a positive impact on the environment. So that's what impact investing is all about, investing in those things that are going to have a positive change and help us move towards a newer, greener world. And responsible investing, now that's the term we favour at Mattoli Woods. So that's all encompassing. And when we're putting together our investments, we like to incorporate all of the ESG issues into every investment decision that we make, that we engage in with the companies we invest in, and it's core to our investment process. So it's not just looking about financial returns, it's about looking at those non-financial returns. So the non-financial returns can lead to financial returns, and I'll come back to that in a minute. So ESG. So that's the real buzzword. But what does it mean? What does it stand for? So the E side of it, as I said, is for environmental. That's all about what impact on the environment a company has. So it'd be about global warming, CO2 emissions into the environment. Does the company have a plan to reduce those carbon emissions over time? It might be about energy efficiency. And a lot of companies have had an easy win in converting all of their light into LEDs, for example, in the last few years, which is a benefit for their profit and loss, but also the environment as well. It's also about waste, water management, and pollution. So it's about looking after the environment. Then the S, that's social. So that's the impact a company might have on wider society. So you're looking at human rights, health and safety at work. It might be about the living wage as well. So it also encompasses things like gender diversity and racial diversity. And the importance of that is if a company gets the social issues right, it might result in lower absenteeism, greater longevity of staff, and increase of productivity for the company. So a non-financial thing which could lead to financial benefits as well. And then finally, the G, that's for governance, and that's about how the companies are governed. So all about shareholders engaging with the company management, talking to the company management about a whole range of issues, both financial and non-financial. It's also about voting and how you exercise your democratic right in every annual general meeting. It might also be about things like remuneration or pay, and board independence. And obviously, well-governed companies are more likely to act in your interest and the interest of other stakeholders. And it's a good risk mitigation exercise, that one. So considering ESG is important, it really enhances the whole process of mitigating risk or reducing risk within companies that you're investing in. So is investing responsibly a new idea? Well, the simple answer is no. So not a very vegan company, Cadbury's, but Cadbury's, Bourneville, the home of Cadbury's, they were a Quaker company, started out in 1900, and Charles Cadbury established the Bourneville Trust and built 300 plus houses for low-paid workers to live in. And that's very much right at the heart of the S in the ESG factor. So they were one of the sort of the forerunners for it. Similarly, Joseph Rowntree, another Quaker, did a similar thing in York for the employees of Rowntree's and other low-paid workers in the city. So they were really sort of socially responsible people. But what would the Quakers make of things today and how the world is now? But if we look at a company like AstraZeneca, for example, they've obviously been in the news a lot with all the resources they put into the vaccines, and they've all been provided by AstraZeneca at cost. So they're not making any profits on the vaccinations there, but obviously it's good PR for them. And then we look at John Lewis. So the never knowingly undersold mantra, very popular with consumers. And John Lewis is a partnership as well. So no matter where you are in the company, you normally get some participation in the bonus pool. And that's deemed to be a very well-run company. And then bringing it a bit closer to home with Mattoli Woods, so Amati Global Investors. Now they're a fund management subsidiary that we work with, and 10% of their profits every year are given to a range of charitable causes. So any profits they make, we get to sort of nominate charities for them to go to, which is a nice thing to do. So acronyms are temporary, but responsibility is permanent. So if we look at push factors, regulators are getting more involved and encouraging companies to do the right thing. A lot of fund management companies are disclosing the way they vote at their annual general meetings. So if you go onto a company's website, you can see whether they voted against or abstained or voted in favour of various resolutions that were raised at the meetings. There's also pull factors involved. So investors are expecting companies to do the right thing when it comes to responsible investing, and they're increasingly voting with their wallets and demanding investments and funds in the area of responsible investing as well. So companies increasingly want to do the right thing. It's good for business, good for PR, and considering these issues more, it's good for everybody in the world. But the biggest institutions, what are they doing? So, well, 20 years ago, with responsible investing, ESG might have been done by one person in the basement of a fund management office. These days, it's done by teams of people who are voting on companies and engaging with companies all over the world. It's really gone up the agenda, and institutions have upped their game on it massively. So why do we focus on responsibility? I mean, obviously it's quite obvious for us as vegans, we want to do the best thing, but why are other people looking at it as well? So we're in the middle of a climate emergency. I think everybody can see that now. There's been lots of press over it. It also has a good thing of reducing risk. So as more investment managers and institutions get into responsible investing, the better that should be for the risk of it, as there's be more focus, and that should hopefully reduce the level of risk involved in investing in these areas as well. Regulation's also changing massively, and it's shifted its focus, and there'll likely be further changes too as well with regards to where people are investing their money. And we see ESG, or the environmental, social, and governance factors, as a massive potential for long-term returns on funds as well, because you can get very good returns on them. So one of the reasons I came to Mattoli Woods, despite not being a vegan company, is the ethos and our structure. So we've got a long track record of being responsible and doing responsible investing at Mattoli Woods. We have our core portfolios which we're investing, but we've also have a series of responsible investments that you can screen. And those are called our ability to invest responsibly portfolios, where we can negatively screen out certain investments. So if you want to completely avoid any companies that are involved in anything to do with animals, or like supermarkets, things like that, you can screen those out entirely. But our core funds, despite not having responsible in their name, also invest in a responsible manner. So one of the things we do is we have long-term thematic allocations. So that's a strange term, that thematic, but essentially means we invest in things like technology, healthcare, the environment, and different sort of sectors and areas, all of which can have a positive impact on people's lives. So with our the air portfolios, they are currently done on negative screening, as I mentioned previously, but we're looking at shifting that to being a more positive, where we select companies or select areas that we want to specifically invest in. That's coming at some point, I'm told. We also have a renewable infrastructure exposure, so that's predominantly through wind farms, but there's also some solar exposure in there, and that's a bigger area that's coming more to the market. And we invest responsibly through our property funds. So we invest in real estate investment trusts, and a lot of them areas they've got commercial property and big sort of retail parks in there, and making big changes with regards to vehicle charging points. I've just noticed when I drove past yesterday, when I was out and about for the first time in a while, that in Leicester we built there's a new shopping park been built, and there's loads of electric charging points been put in there, which is the first time I've seen that somewhere. So that's the sort of thing we're looking at doing within our portfolio as well. And the assets we have exposure to in our multi-asset funds, they really drive change. So we're trying to make a big impact and make sure we're doing the right thing for our clients and to draw other investors in, really. So what do Mattoli Woods look for in our investments when we're doing things? So one of the big things people ask me is there a register where you can look up how green or ethical an investment is? And unfortunately, the simple answer is no again. Obviously, I think it would be a really good idea, and probably you'll agree with me, because the investment universe is constantly changing, but currently there isn't a central register you can go to and check how green something is, or to check their ESG ratings, for example. So I'll tell you a bit about what we look for, or more specifically, what we don't want to see when we're selecting our investments, to give you a bit of a flavour if you wanted to do this yourself. So we don't want to see fund managers telling us that they only focus on the G. So governance is obviously really important, and it's the baseline of what a fund manager should be doing. It's the minimum standard. We want to see that they focus on the environmental and the social factors as well. So they're going to give it a whole approach in there. We don't want to see greenwashing. That's another piece of industry jargon, and I think a lot of people use that in other areas as well. And that essentially means using glossy marketing material to make an investment seem a lot more environmentally friendly than it is in reality. So to use a vegan example, I suppose, you look at the tree planting schemes. They sound a fantastic thing. You plant a tree for every client you bring in or every piece of business you do. But I've seen an example of planting non-native trees in areas, and they can attack the native plants and the habitat. So it's not always a good thing. It sounds great in principle, but it's you have to do some real sort of deep diving and make sure you know exactly what you're doing there. And that's why we have to be cynical. We use a fine tooth comb to investments to find the truth and make sure investments are doing exactly what they say on the tin. Ratings providers are an increasing feature within the industry, and they essentially collect massive amounts of data from companies all around the world. They aggregate it and come up with some sort of score. So it might be a number or a letter. So in theory, it gives investors an indication of how ESG friendly an investment might be. So if you look at the table on the right, that shows a selection of companies, and obviously some of the ones at the top are a bit more ethically questionable or dubious. So they've got massively high scores, which indicate they're really good on the ESG side of things. But if you look at how big their market capitalization is, they're massive companies. So they're big companies with a big market cap, and they tick lots of boxes that ESG ratings providers or companies are looking for. Smaller companies don't have those resources. So they aren't able to provide that information, and they get penalized for it. So they score lower. So they might be a really good company doing a lot of really good things, but they're not scoring as high as a BP or a British American Tobacco because they're quite a small player in the market in comparison. So we're very conscious when we're looking at our investments as a team that just using in ESG rating providers can provide a massive sort of a big large cap bias, and some investors you might not want to see can end up invested in your portfolio. So you've got to be careful and really look into it. And it can also come down a lot to personal preference. So when you're selecting your own investments, one person's okay might not be okay to another. There's no set guidance. If you take Tesla, for example, with Tesla, looks like a great company on the surface of it, but when you dig down a little deeper, environmental side of things, great. They're doing a lot for electric cars. Social, pretty good on that as well. But the G side of things, the governance, if you look at Elon Musk's brothers on the board, how independent's he? They invested 1.5 billion pounds into Bitcoin. So Bitcoin is notoriously the mining that goes involved there uses a lot of electricity, and electricity is not necessarily green. It's provided a lot of fossil fuels and things. So that doesn't fall into their sort of environmental side of things. Also, a few years ago, there was the child labor issues in the Republic of Congo, by extracting cobalt, which needed in rechargeable batteries, is a big problem in the Congo. They use a lot of child labor over there, unfortunately, still do, but it's getting better now. But that's where you get the cobalt from. It's the biggest source in the world. So there's a lot of issues that you've got to look at in the background there. And just on a side note as well, if you look at actual investments, so there's lots of investments out there that are ethical investments. So to take two, one run by Aegon and one run by Jupiter, they're both ethical funds, and they've got top 10 investments. But if you look at all the investments in the top 10, they're completely different. One of them has Tesla in, the other one doesn't, because people have got different views on it. So it's a lot about personal preference as well as it is about looking at the facts and figures that are provided in a fact sheet when you're looking at investing in a company, for example. So what do we want to see when we're investing in people? So our multi-asset fund investments we work on a fund of fund structure, which essentially means we're one step removed from the underlying holdings. We don't directly question, therefore, a company like Facebook or an AstraZeneca, but responsible investment remains very important to us, and we'll ask the fund managers those questions and look at how they're integrating ESG into their fund management process. So we want to see a formal and repeatable ESG process and ask to see evidence of it as well. So we look at employment practices and things in the background, and like to see a real interest in ESG, not just doing it because they have to do it or it's the hot topic. And honesty is massively important there. That's why we ask to see the evidence from them. So I've thrown a few frequently asked questions in there that people have asked me. So is ESG the same as responsible investing? No. They're two similar concepts, but quite different at the same time. So ESG is a management framework. You'd analyze a company or a fund through the lens of E, S, and G. Responsible investing is like any other form of investing. You look for attractive, long-term, risk-adjusted returns, but you also have an eye to the environment. But you might use ESG to help you implement your strategy. So why are ESG factors important? So what's the risk if a company falls foul? On the upside, if companies looking to improve, we see this as a catalyst for long-term returns. So they might be looking at getting better, which could be a good thing for that company. And is it just a trend? Well, I think we get asked that a lot as vegans. I certainly have done. Is it just a trend? Why are you vegan? And I think it's the same with this sort of style of investing. Certainly not. The financial press has picked up on an appetite for ESG and responsible investing. So there's been a lot more articles on it, but regulatory change is coming and there's already been implemented, and it means it's going to be a permanent feature of markets, and it needs to be for us to get the impact and the change that we need. I think the key thing for me, for all of you to take away, is that in an all-encompassing in environmental, social governance, or an ESG fund might not be the best and most stable. There's a few of them out there that call themselves an ESG fund. Might not be the most stable just because they've ticked all the boxes. So do your research or engage an expert to do that for you, and hope you come to the right conclusion for your needs, really. So that is me on that. If anybody's got any questions or wants to throw anything else at me, feel free to fire them at me, and I'll do my best. So let me just put this up on the screen as well. This is our disclaimer. So I'll leave that on the screen for a few seconds. And if anybody wants to ask me any questions, we'll come back to that, and I'll stop sharing my screen as well. So.
Thank you, Matt. Really, really interesting. Lots of content in there. I can see a question from Alice in the chat already. So do you want to?
Yes. Yeah. So that's an interesting one. With regards to the property. Property is what we class as a neutral. So there's no sort of screen or anything particularly with property, because it's a strange sort of area, because you can't manage a company's. So a property might be completely green on the fact of its energy ratings are brilliant. So they've done all the asbestos checks and it doesn't let lots of energy out. But then it could have a tenant in it that's not an ethical tenant, like a butcher or someone, for example, could be in there. Then it's obviously going to fall foul of a vegan wanting to invest in that company, invest in that property, should I say? Sorry. So yes and no. It can be ethical investment. We are doing a big focus on our property side of things with regards to the energy ratings. So any properties we have within our property portfolio, they're all going to have a C or above rating, which means their energy rating is good. They don't let much electricity out. They keep the heat and things in. So it's a pretty good factor, and a lot of people are bringing that more into the mainstream. But there's no sort of set guidance on it as there is with normal investing.
Brilliant. Thank you for that. Does that answer your question, Alice? Oh, she's on mute. Okay, let's assume so and move on to Jane. Jane's asked, where would you recommend investing a lump sum rather than just sitting in the bank? Sounds to me like that's a full appointment, Jane.
I think so. Yeah, sounds like it. I think I've got certain, speaking from how my clients are doing things at the moment. Yeah, we're still in a strange period. The last 12 months obviously has been a really volatile market. It's not as volatile as we expected it to be perfectly honest. But I've got what clients particularly they've got a lump sum, and perhaps not looking at putting it all in one go. They might be phasing it into the market. So doing the thing we call pound cost averaging, where you spread it over a period of months. So you could do it over, say, 3 or 6 months. 12 months probably a bit too long. But 3 or 6 months, and then you gradually sort of invest chunks in. So if the market suddenly drops overnight, you haven't got all your eggs in, and then you can spread it out over a period of time. That can be a good idea, but it depends on your own circumstances.
Does that answer your question, Jane? Good. Okay, Jamie has asked what your thoughts are on the plant-based stocks that are coming onto the stock market.
My thoughts personally, brilliant, because I think the more that come in, the better, the more access that people are going to have to it, and the more popular things get. Like I said when we were talking about the large capitalization, like people like BP, the small players in the energy industry, for example, that are really green companies that aren't massive companies, so they won't tick all the boxes because they're not big enough yet. And BP are now sort of trying to gobble up some other companies and get rid of the oil exposure and bring in wind farms and things like that. So it's creating change. The smaller companies that come in creates change for the bigger companies as well. You see it with like the restaurants like KFC and Nando's and people that are trying to change and draw in vegan people in as well. So yeah, I think that's great. The more businesses that come into the market, and the better. But the problem is a lot of these are really young companies. So investing directly in them, there's a big risk in doing it because not all of them are going to survive. So we had an example of an investment we'd done with a company last year. We'd done a big fundraise to invest in, and they were doing waste management. So they were bringing in lots of council waste into the to invest in these big sort of warehouse where they did the biogeneration stuff. Unfortunately, COVID had a massive impact, and they didn't survive it. So you've just got to be aware of that sort of thing when you're doing it. Just how news the company. Don't put all of your money in it. If you want to have a dabble in it, it's got to be right for your risk profile. And that's what I with all clients I have. We do a full risk questionnaire with them and make sure they're comfortable.
Brilliant, thank you. Right, I'm just trying to keep up with chat. So Sabrina's asked, is all crypto unethical? Is there a way to find out more about their ethics?
It's a difficult one because I've heard people say, "Oh, well, it's just crypto." It's the same thing as I think Kaylee said before about the internet, how much electricity and energy that uses, and we're still heavily reliant on fossil fuels. So crypto is just it's based on a computer, but the mining element of it uses a lot of electricity. So I saw something, if Bitcoin was a country, it'd be the 9th biggest polluter in the world because it uses that much electricity. So it's monstrous. But you've got to be careful with these things because technically it's not unethical, but it's the process that they're going in the background. And no, it's the same with other things. There's no sort of central register to go and check how it is. You can look on the sort of fund sheets and see what they're doing in the background, which is why Elon Musk with Tesla likes investing in Bitcoin, because technically it's not doing anything wrong, but the mining process in the background is not great.
The figure I've seen is comparable, just Bitcoin, let alone all the other cryptos, comparable to New Zealand in terms of carbon emissions.
Bigger than Argentina, I think, was what I saw.
Yeah,
so
quite crazy. I guess the other thing to think about with Bitcoin is it's often used by, shall we say, some slightly shady entities to mask what they're doing as well.
Yeah.
Traffickers and people like that. So a bit dubious. Okay, so the next question, you've got a lot more to answer here, Matt.
I know.
Right, Kaylee, how often would you review your investments? I know you should plan to invest your funds for at least 5 years, but someone said they should review their funds every year.
Yeah, you should certainly review them every year or 6 monthly. Some people do it daily. That's too often because you can panic yourself to death doing that. So yeah, if it's a long-term investment plan, sort of 3-5 years plus, then don't look at it too often, but certainly keep a track on how it's doing. 6 monthly, annually. I tend to either speak with my clients 6 monthly or annually now. We were doing it a bit more frequently last year with the volatility, but it's 6 monthly and dependent on your own comfort level. And as I said, don't look at it too often. 1 month it can be down, the next month it can be up. It tends to, over a period of time, you see a truer picture than you would if you do it too often.
Brilliant, thank you. And I think, at least at the moment, the last question in chat before I just let people ask for themselves is Lena has asked if the ESG score is publicly available and if it can be reached by everyone.
I don't know the answer to that. I think there are providers out there, that are ratings providers that you can go on and see. So there's lots of if you just go on and Google, we do the same thing for when I'm investing. Well, our investment guys can go out and speak directly to the investment managers, but a lot of the stuff is certainly the publicly listed ones, you can get access to them, which is why I say like the likes of BP score massively high because the massive publicly listed company, the smaller ones probably not. So you're not able to see the information on them because like Oatly are doing a big IPO. I know obviously of Oatly as a company doing the oat milk as a vegan, and think that's a great thing. I'd like to invest in that personally. That's not an investment recommendation, but I would like to. But it's just you don't know because it's not available until it's a publicly listed stock on the market.
Yeah, I think. I mean, my experience from some of you will know I've previously worked in financial services as well, is that the ESG ratings are kind of being thought of a bit like credit ratings as well, right? Where the agencies that provide, say Moody's, for example, that provide ratings on big companies and countries are starting to think about how they produce ESG ratings.
Yeah.
So, but equally, you can't go look up the credit rating of your local corner shop or whatever anymore.
You can't. It'd be in people's account, so like trading accounts. So when we do our reports to the market, we have a section in there on ESG factors. So yeah, it's available for all sort of listed companies. Yeah, if you look for the right place. Yeah.
Right. Does anyone else want to ask? We've probably got time for maybe 2 more questions. Looking at the time, if anyone's got anything else, wave at me if you do, because there's lots of people on today. Or are we done? Maybe we are done. Okay. Yeah. All right. Well, I'll stop the recording there.